Hello, YouTube. There is panic on Wall Street, and we find ourselves right back where we were yesterday, right back here to our bear market downtrend, and we are trying to poke above it. We have Credit Suisse as the newest casualty inside of this massive global phenomenon. As a reminder, things move fast in the digital age, and that's what's happening here. Credit Suisse is hitting a new all-time low. So please stay tuned in today's video because we're going to walk you through some of the most important things to be watching after the close today and what to watch going into tomorrow. So there is a push pull happening off of off of this downtrend here. And it's so important because we recently tested our 200 DMA or the long-term price and we rejected. If we look over here to QQQ, we can note that we actually have a bullish daily engulfing candle, which is really significant to me. Why? Because it closed green on the day. That is incredible. It broke down, but then ultimately recouped it and closed right at the high with a bullish engulfing at our daily downtrend. So yesterday we talked about how there is blood in the street and it might be time to buy. And yes, I understand today's video says panic. I'm just making a video I think you're going to click on. It's not to try to say that's exactly where we're going to go, but thank you for watching this video. Anyways, so as we're here at our downtrend, it's going to be very important where we go from here because as I look at QQQ, looking at this chart, we get one story, and we note the volume here where as we start to go higher, we get increasing volume, and it's mostly green. We got one big red day, and then it basically got bought up the next day. Here's one more chart that's really interesting, the weekly chart on QQQ. Why? If we're at a turning point, which we called out on the weekend and for a little bit here, why is this interesting? Well, it's interesting because we're back above the turning point that I was looking for, 300. We're over the 50 weekly. We bounced off the 200. We have a failed breakdown. This is like a fast moving market. So I think we have a great show for you today. And again, please just make sure you watch all the way till the end if you want all the insight. One additional chart at a high level here before we look at the news is QQQ divided by DIA. This is basically long QQQ inverse DIA. And this one's really important because I was looking for this bullish formation to form, either an inverse head and shoulders or a cup and handle. I think it decided to cup and handle, and we're up here at 0.94 or almost back to parity. Why is this significant? It's significant because we had a death cross, which is when the short-term price crosses below the long-term price, but we got over both. So QQQ divided by DIA, this is flashing a signal to me. I think that's the reason why the NASDAQ's up is because what I mentioned before, people who are in growth or tech or things that do well when interest rates go down, well, they were buying it up not just for this last week. They've been buying it up ever since the beginning of the year in January. And as a reminder, we're going to have 13F filings or basically report cards for fund managers going into the 31st of March, which is coming up here in about 2 weeks, right? That's going to be very, very significant. Why? Let's look at one more chart. Then we'll look at some news. Then we'll start coming back and looking at more charts after. Why? Well, the S&P is up by 1.37% so far this year. So piling into the NASDAQ or NDX, this is currently up here at 12% on the year. You're going to appear very smart if into March 31st you own tech and not SPY. If you own the Dow, let's look here to DIA. It's right on the year, right by 3.5. So you don't want to window dress. And window dressing just means that you pretend that you didn't own the losers, which right now was the Dow, and you pretend like you owned the winners, which right now is the NASDAQ. So you're like, oh, I held it all along. I was long the NASDAQ since January 1st. And it's interesting, even interesting here that on the 12-month chart, we're basically back testing our 2021 low. All right, let's jump in and look at this news. So what caused the chaos today? Because you might be surprised what actually caused it. Credit Suisse reels after top shareholder rules out raising stake. This is the Saudi National Bank head, basically like Jerome Powell for the Saudis. And he basically said, absolutely not. I think he said there were 5 different reasons why we're not going to put in, but he talked about regulatory requirements. So here he talks about how they would not increase the stake beyond 10%, which basically means some funding, right? They're going to have to do a raise to get shored up to make sure they're going to be okay. They basically said no. This was an article that a interview that happened on Bloomberg, and that's where the turmoil really happened. The Swiss government holds talks on options to stabilize Credit Suisse, and this is likely going to cross before we have the ECB coming out tomorrow. We got a rate decision at 9:15. This is going to be like so spicy. So I believe that we're going to get an update here. We already had some preliminary headlines come out, which is part of the reason why we actually rallied into the close here. So if we'll have a look here at the ES, we can have this is just the one that I've been tracking. So if you like to look at a different one, no problem. But that's part of the reason why we started to moon. So we started to moon on a really interesting pattern here. So I just want to talk about this for a moment, then we'll go back to the news. So I was looking at this pattern overnight to, again, buy the fear is what I laid out in yesterday's video. Ultimately, we woke up to, whoa, a big fat red. And that's what caused it. This big move down right here was from that headline. So what's interesting about this is that people thought it was over. There's no systemic risk. They came in and bought it up yesterday, and they bought it up again today. Why? Elevated green volume on Monday, elevated green volume on Tuesday, elevated green volume on a Thursday. And that's the S&P, not even the NASDAQ. Even though we're red, people are buying it up. And I think that one of the reasons why might be that the CFTC net short positioning is just so large. So you can see a beautiful place there in Alberta, Canada. But anyways, looking here, we have a fat short position, 234 contract short. That's huge. This has been a protracted trade. It's been happening ever since July of last year. Yeah, they're relentless. They're not letting go. These blocks are dense. They're big. It's bigger than 2020. And it's the biggest one we see here going back to, I believe, 2016. So, like, if these guys are not covering, it's going to be very interesting. So continuing the story here, we look and see that, okay, well, if that's the reason why we went up, again, this is like a fluid story. And I have a quote for you we're going to get to a little bit later from Bruce Lee. But let's just understand that what we're talking about today might change tomorrow, right? This market is moving fast. So is the Swiss government going to come in and bail them out? As of right now, they said we're going to provide liquidity as a backstop if needed. The same thing Jerome Powell and the Fed and the Treasury also said over the weekend when we had that SVB. All right. U.S. Treasury receives U.S. banks reviewing U.S. banks' exposure to Credit Suisse. Officials working with Federal Reserve, European regulators. Credit Suisse turmoil adds to concerns over financial stability. Yep. Fear is quite high, extreme fear. We were at about 17 at the low for today, 25 yesterday. It's starting to, so the rate of change, 20 divided by 25, we're looking at a rate of change versus yesterday of about 20%. But because the numbers are smaller, it might not look like it, but there was a jostlation in fear and greed that took us right back into extreme fear yesterday. And why does this matter? Because Credit Suisse is something called a SIFI, a systemically important financial institution, which means if it fails, it's a big deal. So let's look at a few more things here. Let's look to Credit Suisse. So we talked about the top shareholder now wanting to pitch in. I tweeted this out earlier. Again, if you want to follow me, link in the description. This is the U.S. insurance ETF, and this looks just like IAT. What is IAT? As a reminder, IAT is the regional bank ETF. And we note here that we're actually off our lows. So I believe that another area that could actually be causing some concern could actually be the insurance sector. Why? Man, if there's some credit defaults, or if something else happens, there's going to be some massive ramifications inside of the insurance sector. How do I know? Well, because I used to work in the insurance industry, and there's insurers, and then there's reinsurers, which will invest the insurance companies. And if there's going to be an issue, again, remember AIG? Yeah, I remember AIG. Let's actually look at the chart. Why? It got wrecked. So if we zoom out here, we look at what happened here. Oh my goodness, what happened here? Went from about 1,200 to about I don't know. Did it go negative? Low of $6. Okay, cool, $6. That's a big, massive move, and it's not recovered even on a log scale. Oh, there you go. There's your log scale. That's not pretty. So that's what I think this is voting and telling us. People are worried about insurance right now. And thank you to Elizabeth for sharing this. This is the size of the Silicon Valley Bank failure, the second biggest ever since 2000. So we had Washington Mutual. I don't know when that happened, but that's the closest one by comparison. And this matters because Credit Suisse actually has assets under management of 1.6 trillion, and they have about 800 billion in exposure. So what does that mean? They're a SIFI. They're a systemically important financial institution. So this has global ramifications. Their assets under management and just their operations are larger than the entire country they reside in, Switzerland. And when we look at that number there, the 1.51 trillion, that's actually a little bit higher at about 1.6 trillion US, because one Swiss franc is worth 1.07 US dollars. So it's actually a little bit higher. We talked about how the Treasury is reviewing the financial sector exposure, and that pretty much wraps it up. So here's a quote for you before we look at a few charts. You want to think like Bruce Lee, because right now the market's moving fast, it's moving violently, and if you do not do a good job of managing your risk, the market is not going to forgive you. It's not going to redeem you. So be like Bruce Lee and be like water. Empty your mind. Be formless, shapeless, like water. Now you put water in a cup, it becomes the cup. You put water into a bottle, it becomes the bottle. You put it into a teapot, it becomes the teapot. Now water can flow or it can crash. Be water, my friend. Why? There is going to be even more stuff coming in. PPI came in, again, month over month. So previous number was really hot. Same thing with retail sales. So it's starting to come down. Is it enough? I'm not sure. I'd like to see the year over year number, but we don't get that. But anyways, looking forward to tomorrow, we've got the ECB talking, and that is likely going to be a focal point for the market. I know I will be watching that. Why? Man, are they going to do 50? And if they don't, that likely tells us more than if they do. If they don't raise to 3 when that's what's already priced in, it means they believe there is systemic risk. So it's going to be very important what happens. The timing is also that we're going to get all this stuff crossing about 15 minutes before the cash market open in America. And then as a nice little bonus, we got CPI out of Europe coming in on Friday. Woof, right? What a market. And this matters because whatever the ECB does is going to be a preview for what the Fed tells us on March 21, 22. And this is going to be so important because now the Fed's going to have to give us an updated SEP, or a summary of economic projections. I don't know what they're going to do. I do not envy the people of the Fed right now or the people in that job. So let's look at a few more charts here, because you might actually be quite surprised to learn that the S&P is actually green in the week, 0.87 or 3.37 points. If we remove everything and think about the pattern that I laid out on the weekend, it was this pattern right here with a double engulfing pattern, 1, 2, 3, and then the nasty drop. Well, what do we have over here on this side so far? We got 1, 2, we got the 2 engulfing candles. We do have the breakdown, but then it becomes a failed breakdown by reclaiming last week's low at 384.32, which is where we spent a lot of time battling today. So even though this pattern is still similar, it's only Wednesday. And if we're not going to get that move down, all it means is that we got 2 shocks to the entire financial system for the world. We got one on Thursday, which reverberated into Monday. And now we got Credit Suisse today, just on that one headline. And we're green. So this tells me that if bad news can't take us down, what could good news do? People are already buying up the NASDAQ, as we talked about. So I really believe that it comes down to the CFTC short positioning. And the best part is that if you subscribe to the channel, if you come back on Friday, we're going to actually update this live for our final hour. We enjoy hanging out with you guys. And I forgot to ask, if you're enjoying the content, please smash a thumbs up. And then consider subscribing to the channel if you're enjoying the content. I would personally appreciate it. All right, let's look at a few more quick things here, because the market is moving fast. So we got to be mindful of it. We talked about the S&P daily downtrend. Volume is elevated. QQQ, right, back over its 50 weekly. We're right here on our daily downtrend. Right here just means that we're butting up against this red line here. Not sure if it's going to pass or not. I'm seeing a W forming, but we also have a dominant kind of head and shoulders inside of here. I'm not sure what it is. Looking at the dollar, up by 1%, booming off its 50 DMA. So it's starting to advance. Is it going to push off more? I don't know, right? VIX up 10%, has those massive upper wicks, almost got to 30 today. 29.91 is the high of the day. It is above its 50. It's above its 200, which basically means that on a daily time frame, VIX is now elevated. Over 30 means warning. Over 40 means red alert. So if we don't breach 30 and hold it, I think it might be because of options right now. There's a lot of options that are going to be expiring. 2-year note, woof. Bearish engulfing daily candle, fully puked up yesterday's move. 10-year note, bearish engulfing daily candle below yesterday's low. The Treasury market was also briefly halted today. I think it was for 30 minutes or whatever, but trading actually was halted. You could not hit buy and sell. Oh man, looks like the financial system's jamming up. But looking here to the 2 and 10-year note, which is the inversion, it's also coming down. So inversions usually peak out as a recession is approaching. And this is so interesting because tomorrow, or March 16 is going to be, well, that's terrible. March 16 is going to be the 1-year anniversary for the first Federal Reserve rate hike. We also know that from the time that inversion starts, which basically means when we get above 1%, that is usually the signal of the recession. Here it happened in August of 2019. It happened less than a year later in right when we had the lockdown, as you guys all know. And then looking to the second time it went over 1% here, that happened in April of 2022, right here. So if that's when it happened, well, April plus 12 months, that's April 2023. We're just closing out March. We're going to be into April right away here. So it usually, again, usually is 12 to 18 months after inversion happens that we actually see the recession. It almost seems inevitable now. So there you go. That's the next thing to look at. Oil also tanked. So if we have a look here at oil, what's interesting is that we've been seeing this dip buying happening here on light sweet crude or CL, the futures. We got a low, lower, lowest. We're right here back to our 200 weekly moving average. And this just means there are concerns about, right, there's called demand, sorry, let me just make sure I use my words correctly here. There are questions about demand, meaning, man, everything's going down. So people are likely going to be shutting their doors. They're not worried about producing, which means they don't need energy. That's what it means. Gold is up. Okay, gold is up on the week, looking pretty good. It's actually battling for its 2011 all-time high. So it's almost ready to go into blue sky breakout. It's forming a W inside of here. I'm bullish on gold. I like it. So this just tells us that people like the safety of the dollar. Gold, sorry. They like the safety of the dollar. They're fleeing into treasuries. And when these go down, it just means that people are bidding it up. If that confuses you, just trust me. When these numbers go red, it means people want them, right? They're buying them, buying them, buying them, accepting a lower yield. That's what it means. Looking at Bitcoin, it's been oscillating. And what's interesting about Bitcoin here is just that we look back to our 2018 all-time high, and we bounced off of there. We formed a W. We're battling for the 50 and 200 here. Here's where I'm getting a bit of a warning, at least for risk sentiment. When I look here to the one-day chart on BTC, yesterday we have a move higher here into Monday. We exhaust into Tuesday, and then we actually don't have a failed breakdown, but we do actually break down below it the next day. So this massive upper wick here is a bit of a warning, and I think people are just fleeing to what they perceive to be safe. Is Bitcoin actually safe? I have no idea. I know gold's safe. If people appear like they think crypto's safe, that's why they're buying it up. I am not so sure. I think there might be exposure to some banks for crypto, and I say that because I actually have a headline here from Signature Bank from Bloomberg, which I actually read yesterday, which was very interesting. Oh, that's a nice headline, Justin. Thank you. Wasn't already read enough today. Signature Bank faced criminal probe ahead of firm's collapse in regards to what? Working with crypto clients. Oh, yeah, that's nice. And the reason why I say that's nice is because we know all the trillion-dollar companies, there's a bid in those because people want to buy them. They're nice and safe. But let's look here to the things that I am watching. So I'm watching IAT, which is the regional bank ETF. It is not catching a bid. It is down by 16% on the week with a doji, which actually means that we opened the week at 35.63. We're below that. So we are lower than we opened after the Fed said an unlimited guaranteed backstop. That's what they told us. Then we look at IAK, and this right here is the insurance ETF with, again, a certain je ne sais quoi regarding the AIG, which is what I think is happening here. So there is just so much at play right now. If you want to watch more, I encourage you to watch the weekend deep dive queued up here over on the left-hand side. And if not, thank you so much for tuning in. I look forward to seeing you tomorrow. Thank you again.